Are you someone who wants to retire early and or have the financial freedom to travel and do whatever you want with your time? Then this step-by-step guide will show you exactly how you can, whether you've just graduated from high school and you don't want to follow the traditional path of the work 9 to 5 and work for 50 years, then retire and rely on your retirement account and Social Security, or you're in your 40s, you have a home that you've been paying off with your hard work, you have equity and a decent retirement account, but you're ready to learn to see if you too can retire earlier than you expected and finally quit your job and take control of your life. I am a loan officer whose purpose is to educate and share the knowledge that I've learned working with investors, and of course my own journey, how I got approved at 23 for my first house hack, how I didn't know any better and I quit my job to start my career as a loan officer. So stay tuned and tell your date you're running late, or better yet, cancel and start saving now. So house hacking, yes, house hacking is the fastest way and easiest way to not only live for free, but build wealth and retire early. We are in a buyer's market where we can actually negotiate price cuts and seller concessions. There has never been a better time to purchase real estate than right now. Now let's talk about how you can without having to move back in with mom, although that is a great option. First, it's saving and staying out of consumer debt, whether it be a new car or credit cards. It's important to note, if you're going to put yourself in the best position to get pre-approved, then in order to qualify for a conventional or an FHA, you need a minimum of 3% down, 2 years work history, and a decent credit score of around 620 preferably. Although there are lenders that can go as low as 500, I recommend, if it's an easy fix and you can avoid paying a higher interest rate, then do it. There are exceptions with work history if you have less than 2 years, but consult with your loan officer or feel free to reach out to myself if you qualify for these exceptions. Second, it's the power of leverage and learning how to use it towards real estate. And in this case, being able to borrow up to 97% and only putting 3% down, unless you're in a position to put more, then all power to you. So once you've been pre-approved and you're able to use leverage, then understanding these three things, so when you start looking for a home to house hack in, it's going to be vital. The first one is location, then second, under market, then third, research. Let's go into detail in each one. So location, you want to make sure that that home you're purchasing in is in a location that you've done your research in and know that the home will appreciate for the next 50 years while you're building your empire, because investing is a long-term play and nothing worth having comes overnight. Second is you want to make sure the property is under market value by at least 5 to 10% so that you can protect yourself against a market downshift. And especially if you're going to use the BRRRR method and you're going to rely on that appraisal after you've rehabbed it and refinanced it. And lastly, it's doing your research for rents and what to expect when you're looking for a tenant and how much they can pay for that room. If the bedrooms don't rent out and they don't cover your mortgage, but you can still save monthly compared to if you didn't purchase a home, that's okay, because paying $500 of excess to cover the mortgage to be able to take advantage of leverage of your appreciating home of the 3 to 5% annually historically, the tax incentives, the equity with the tenants paying down your mortgage, and your future cash flow that can replace your income and give you that financial freedom you please. In my case, it's sipping on a margarita somewhere in Mexico on a beach resort with my wife. But that compared to renting a 1-bedroom for $1,800 and never seeing an ROI, or return on investment, is ludicrous. Third is delayed gratification. Once you've gotten into your first house hack property and you've been there for 3 years, you will have saved up enough through avoiding your housing expenses, renting, living for free, and that small cash flow, and you'll have built enough through appreciation and principal pay down. You'll be able to start looking for your next house hacking property. And you'll ask, how? Don't banks require 20% down for investment properties? The answer to that is no. once you've locked in that next home, you can put as little as 3% down, but you'll have to convert your first one into an investment property and that second home into your primary residence. Now, like I've said, if you want to put more than 3% down, then all power to you, but you want to make sure you at least have 3 months of living expenses saved up and 3 months of rental expenses saved up for vacancies or maintenance. Now, remembering the same principles apply to your second home, which are buying under market, making sure you do your research on the rents, what you can rent your room for, and making sure that that home will appreciate, which is location, location, location. Now, congrats, you're a real estate investor and landlord who's living for free and has not one, but two properties whose mortgages are being paid down and building you equity and cash flow that will only grow as rents grow 3% annually. Now you can repeat the process of waiting until you have enough savings and equity to continue your plan for world domination, which means keep moving every 3 to 5 years and increasing your cash flow and net worth substantially by repeating this process until Fannie Mae stops you from being able to purchase. The limit for conventional is 10 properties max. So you ask, what do we do now? And the answer to that is, thankfully, you can take advantage of other people's money, OPM, or DSCR loans, that stands for debt service coverage ratio loans, that can help you finance an unlimited amount of properties that don't require personal income, but that the rent has to cover that mortgage by a ratio of at least 1-to-1. Now, I know what you're thinking, 2008 housing crisis all over again. I've seen the movie The Big Short. I know what you're talking about, but no.
You're terrific.
Thank you.
Your big mouth was a revelation.
I appreciate that.
You're worried you and your swaps are getting played? Well, this is an opportunity for you to meet who you're betting against. Try not to get too righteous and listen a little.
Okay, fine. Who is this guy?
And a real solid gold asshole.
The issue then was the unregulated ARM loans with negative amortization, the balloon payments, and loans given to people who couldn't afford it and were 100% financed. Now, unlike then, as a direct response to the 2008 housing crisis, the Dodd-Frank Act was enacted in 2010. This law established a wide range of reforms throughout the entire financial systems with the purpose of preventing a repeat of the 2008 housing crisis. It also included the CFPB under the Dodd-Frank Act to prevent predatory mortgage lending and helping consumers to understand the terms of a mortgage before agreeing to it. Now, that being said, and being rest assured that you are fully aware of the risks that are associated with real estate investing, but myself included are here to educate and are not only regulated to be transparent, but that's what this channel is all about. Sharing the ins and outs of mortgage and helping you become a more confident homeowner and investor. Aside from the different types of DSCR loans, another alternative financing is OPM, building partnerships with family or friends with common goals of investing in rental properties to finance your next properties is another great way to continue building your portfolio with your track record and little to no money down, when you can invest with others and split the cost, revenue, and profits. Now, that is the step-by-step guide to help you replace your income and give you the financial freedom you deserve by using leverage and building wealth to create cash flow through rental properties. This is a tried and true way. You're one step closer to becoming financially free. Keep educating yourself. Don't have paralysis by analysis. Consult with your loan officer and mentors and take action. Let's go.